Hello, it's ChewDog Charts, and today we ask the question, is Nike worn out? Let's take a look. Last week, Goldman Sachs downgraded Nike. The firm lowered its rating for Nike shares to neutral from buy, citing an intense promotional environment for the company's products. Analyst Lindsay Drucker-Mann wrote that the drivers of domestic pressure will take some time to work through, exacerbated by persistent excess inventory sitting at Nike's brick and mortar retail partners. She went on to say that near-term dynamics are challenging, with an inventory overhang in the U.S. hampering Nike's ability to reset the market. Recently, Nike shares have underperformed the market year to date, with its shares up 3% through Wednesday compared with S&P 500's 14% return. Lindsay Drucker-Mann reaffirmed her $54 per share price target for Nike. She went on to note that Nike's North American sales growth has deteriorated in the past year from 6% in fiscal first quarter 2017 to a 3% decline in the most recent fiscal first quarter 2018. Lastly, she said that international has been a critical growth engine, driving about half of Nike's revenue growth over the last decade and with substantial opportunity ahead. Nike's business has cooled in key regions with signs of deceleration in China, giving us particular pause. Let's take a look at the charts. What we're looking at is the 20-year monthly chart on Nike using real-time stockquote.com. As we can see, Nike closed Friday at $53.06 per share. Looking back, looks like Nike started a relatively decent increase beginning in about early 2003, moving up through 2007 and 2008 with a decline down into early 2009, then with the subsequent surge into late 2015, at which point in time we had a decline down to the $50 per share mark, or the general area, and then some sideways trading in the last, say, year and a half. Based on this price chart and based on some of the oscillators we're going to take a look at, I actually think that Goldman Sachs is about a year or two too late in their call. If we move on down to the MACD, we can see that the MACD peaked in late 2015 and then took a significant decline down into late 2016, and for the last year or so has traded sideways. However, we do have another decline here in the fast line, what I call the fast line, as it reflected off of the signal line and then headed back down. However, when you come and take a look at the histogram, it shows that the maximum weakness was in the late 2016 timeframe. Currently, we did approach the zero or midline, and then here we see the reflection that I talked about earlier. However, the reflection is still well above the maximum depth that we reached in late 2016. So actually, I think most of the risk has been wrung out of Nike. Looking at the relative strength, we bottomed here in late 2016, and we're still above here in 2017, and we're again nearing the midline, showing a little bit of strength in my opinion with an upward trend. That, I think, is also shown by the stochastics. Again, the bottom in late 2016, the upward trend, and the fact that we still are much higher than we were a year ago. Not sure where this is going to head down. It's possible it could head down, but for my money, I think we're in a better position now than we have been, say, since late 2016. Moving here into the Williams shows the same thing with the general improvement in this period of time here. So going back up to the price chart, we'll get a clean chart, let it reset, and we're back here. We have moved below the 20 EMA, but I think we're holding above the 50 EMA. So as long as we hold the 50 EMA here, and we'll find out soon to see if Goldman Sachs call has any downside pressure on Nike. But as long as we hold above this 50 EMA, this is a stock that I might be interested in. But for disclosure purposes, I do not hold any long or short positions in Nike. This is one to keep an eye on here in the next coming months. So that's it for today. It's ChewDog Charts. Thank you.